So welcome to the Bay Area Council, everyone. And if you, those of you who aren't seated yet, please grab a seat. I'm Jim Wunderman. I'm the President and CEO of the Bay Area Council, and it's nice to have you all here today for some exciting news that we have. You may be a little anticipatory as to what it is based on the nature of the invitation, but we're not supposed to give it away. I will say that we invited Governor Rick Perry to come, and he seems to have declined, so that may tell even more a story about this. And as we're meeting, the U.S. Olympic Committee is about to be meeting, or maybe meeting already, to determine who is their pick for the U.S. bid city, and of course San Francisco is amongst those. And once, without giving again anything away, once we do give this away, we should probably quickly get them some notice of what happens here this morning, because it should weigh heavily in our favor. So I want to thank a very busy fellow, Mayor Ed Lee, for coming here today and being with us, and he'll speak in a moment. I want to thank the Milken Institute for asking me to convene this. I was actually down at their Summit, California in Los Angeles last month, speaking about innovation in cities and giving some examples, actually, in San Francisco's case, of some things this city has done amazingly well that have resulted in a transition to becoming one of the absolutely top model economies, not only in the country but in the world. And so after they heard my pitch, they asked if, they told me what's going on and asked if I'd be willing to convene this, and reached out to Mayor Lee and his team, and they said, they'd be delighted to do this. Milken Institute is a fantastic asset to have them here in California, and they are leaders in the leading edge innovative thinking on a whole number of topics. And one of the things they delightfully focus on is innovation in cities and what that means to economies and what it means to our country. And we're really proud to be able to partner with the Milken Institute on this event here today. The Bay Area, of course, we're the Bay Area Council, and our job is to work with our cities and our entire region to support its economy and the quality of life for everybody who lives and works in this great place we call home. And we're very, very fortunate to have such great cities that make up the Bay Area. And here we are in San Francisco, not only a leading edge economy in the world, but certainly one of the most iconic places on our planet. And it's just, I worked for the city for a number of years in the mayor's office. It's just an amazing place. And San Jose, an amazing city, the capital of Silicon Valley, Oakland, right across the bay, with the new mayor just starting out her term, as Sam Liccardo is in San Jose. These are exciting times in the Bay Area. And Mayor Lee, of course, running for re-election. The news that we'll announce here today, I believe, may even help more than help that he needs to give more credibility to the story of what's happening in the city and the transformation that's taken place. So I want to thank everybody for coming, for joining us in making this announcement. My next job is to introduce Ross Duvall from the Milken Institute. He'll talk a little bit about the project and the process that the Milken Institute has for looking at the quality of cities here in our country, and then he in turn will introduce our honored guest, Mayor Ed Lee. So let me turn it over to Ross, and after the comments we should have a little time for questions and a little conversation. Ross.
Well, thank you very much, Jim. It's a pleasure to be here. We have been performing this project since 1999. It was originally published in Forbes, but we decided to take it in-house and publish it ourselves about 4 or 5 years after that. The index is really an outcomes-based measure of economic performance. It doesn't look at traditional business costs or housing costs or quality of life, such as crime rates. We believe that those static measures are certainly important, but they don't cover the true dynamics, and they can be very subjective. So we believe that communities that can create jobs and attract human capital are the best performing cities over the long haul. The goal is to really help businesses, investors, industry associations, economic development agencies, academics, public policy groups monitor and evaluate performance in where they work and where they live relative to the rest of the country. And as we've already noted, it's no surprise we're releasing this today in San Francisco, since San Francisco is #1 this year. Yes. And in a moment, you're going to see what a remarkable accomplishment that is as I go through some of these metrics. What I would like to do is acknowledge my co-authors who are with us today. Manoli Radatunga, who's here. Could you please stand? She's there in the back waving. She did the hard work of putting the metrics together and a lot of the analysis. And also joining us is Armin Bedrosian, who is an adjunct fellow with the Institute. And he projected 2 years ago that San Francisco would move to #1, so he decided to change careers away from being an economist and move back to San Francisco to run the family business, which is a sub-center in the West Portal area. Armin, you're here somewhere. I saw you. There he is. He's in the back beside Manoli. So if you need a sub, 820 Ulloa Street in the West Portal area. And Armin can not only sell you a sub, he can also give you some economic advice. So in the 2014 index, there's really 2 top stories, and they are technology and shale oil. They are the overarching factors behind this performance. And these metros in this list possess a variety of other positive traits than the ones I just mentioned, but those are the factors that are really determining the top 25. Several metros on the list, all the way even down to top 25, are really, they have the innovation advantage. They're able to offset high costs, sometimes higher tax rates, and a burdensome regulatory environment by clustering talent and technology together in an entrepreneurial ecosystem. And that's really what the leaders in this list will demonstrate. Also, technological advances in horizontal drilling and hydraulic fracturing are altering the energy landscape of the United States. Energy investment claimed the largest share of GDP last year since the early 1980s, and the U.S. is producing 4 million barrels of oil more per day than it did just 5 years ago. Now, going forward, recent oil price declines may change that dynamic such that further investments in oil exploration may not be at the same rate as they have been, but many people believe that if oil prices recover to $70 a barrel, there still will be a shale oil revolution underway in the United States. So, as I mentioned, San Francisco, let's stay here, was #1. But, you know, Rick Perry has touted performance in Texas metros for many years. He wasn't #1 this year, couldn't claim it, but he did have 5 out of the top 10 in this list. And so Texas has a unique combination of tech, energy strength, and a very favorable business climate. California had 4 metros in the top 25 as well as Colorado did. And there were 7 metros in the top 25 that were really there because of the energy explosion in the United States. And another depiction of that is we have our small best performing cities. They are roughly the 179 smallest metros. And Fargo, North Dakota, Minnesota was #1 among that group, largely related to oil exploration activity and the positive spillover effects. And in another warm climate area, West Palm Beach was the biggest improver from year to year, moving up 93 spots from last year. And that has to do with the end of the housing bust in that area of the country. So these are some of the metrics that we use in evaluating metros. We look at job growth, wages, technology growth over the most recent 5 years and over the most recent 1 year. That smooths things out over the business cycle, doesn't let any 1 year determine the rankings because that can be very volatile. So we also include year-over-year job growth in the most recent month, which is in this case, prior to publication, was August of last year. So employment and wages are more highly weighted because they are critical to community vitality. Wages and salaries signal the quality of the jobs being created in a metropolitan area. And also, there are other measures that measure the concentration of diversity. And it's really a way to look at a community's involvement in the so-called knowledge-based economy. This is a chart that shows employment growth relative to the peak of this recession relative to others. And what you'll notice is that this recovery has been relatively mild compared to previous ones. And overall job growth in the country really determines some of the pattern of regional growth around the country. Now, the good news is that in the second quarter of last year, all of the 8.7 million jobs that were lost during the previous recession have finally been recovered. So we are finally adding jobs in the United States overall. Now let's get to San Francisco and let me run through some of these metrics that really are astonishing when you look at them. San Francisco was at the top of the list, and it's just a truly remarkable recovery. It's the entrepreneurial ecosystem that exists here in social media, mobile apps, cloud-based computing and storage, software, computer systems design, internet publishing, clean tech, biotechnology, and medical research. In short, it's the creative and scientific economy that are both here. Once again, it's the clustering of technology and talent that shows you the advantages that operating in a dense urban environment can provide that offsets higher tax rates and costs of living. So in terms of job growth, over the past 5 years, San Francisco, the metro area division, ranked 5th in the country across all metros, and that's just really remarkable accomplishment, as I said. So what really catapulted San Francisco ahead this year relative to Austin, which was second this year, was its first place finish in wage and salary growth over the past 5 years and in 2013. So San Francisco had the highest overall wage growth in the country over that period of time. And so it is really the quality of these jobs that are driving that high wage growth in the technology sector, and it's no surprise that all these young, talented, skilled workers are flocking into the city. And the demand is driving up wages. So unemployment in these tech-related occupations is below 2% today in the area. And when you consider that San Francisco has double the concentration of technology that the U.S. does overall, strong growth, a strong base, it results in a lot of economic activity because the employment multiplier is around 5, meaning there's 4 other jobs that are created outside of the tech area that are dependent upon one tech job. This shows you the category of professional, technical, scientific services employment, employment in that area. And it really, when I looked at the data, I was surprised. I didn't believe it initially. But over the past 5 years, 25,500 jobs have been created in this category, and it accounts for 45% of total job growth in the Metro Division. It's just, once again, an amazing accomplishment. These occupations pay over $90,000 per employee versus the U.S. average of about $70,000 in these same categories. And when you look more specifically within the tech sector, $160,000 per employee. So these are very high wage jobs. We all are aware of the rapidly expanding startups, Dropbox, Uber, Quip, you can go down through the list. They are hiring at a rapid clip, and they are absorbing tremendous amounts of office space in the area. But it's not just startups. Companies like Oracle are diversifying their employment base, hiring in the city, hiring programmers and developers in the city. And firms are scrambling to find enough space. So, for example, Salesforce is hopefully going to be moving into a new office tower within the next couple of years. And even Bloomberg is opening an R&D facility south of Market to be near the tech corridor. So medical research, biotechnology, along with social media and apps are really fueling this growth. Along with the University of California, San Francisco Medical School, it's expanding its research and clinical footprint. Let me briefly mention a few others. Austin was second, and it is the most consistent performer in our top 5. It's a dynamic generator of jobs in the technology sector. Just to give you a sense of the consistency, it ranked 1st, 3rd, and 9th in job growth respectively from 2008 to 2003, in 2003, and year over year in August of this year, and also has very high wage growth. Another part of the country, also still in the west though, Provo, Orem, It was in the top three, and really between San Francisco, Austin, and Provo, they were very close at the top three there. And Provo actually led the country in job growth over the past year, rising 5.3%. So another significant accomplishment. And when you look at gross metro product in Provo, it grew by 7.5% versus for the U.S. about 2.4%. So low taxes, favorable business climate there. Fortunately, we have another Bay Area economy in the top five, San Jose, the Silicon Valley area, and it is still the largest technology hub in the country and the world for that matter. That division employs 270,000 people in the technology sector, and it has the hardware component of high tech. So the Sand Hill Road venture capitalists not only fund firms in the valley, but they're funding firms here in San Francisco now, and it is one of the most successful ecosystems in turning research into profitable companies, and also has a very high level educational attainment. So Silicon Valley has double the U.S. average of people with a master's degree or above at 21%. So 21% of the workforce in Silicon Valley has a master's degree or above. Also representing the Southeast, Raleigh-Cary, also another perennial top performer. It has solid employment growth of the past several years and actually saw its job creation rate accelerate in the past year. And over the past 12 months was fourth in that category in the country. Let me just briefly mention some of the small performing metros. As I said, Fargo was number one. Very diverse economy for a small metro. It has healthcare, it has financial services, and other things. We'll see what happens given the decline in oil prices in terms of the oil boom. But overall, looking at the numbers, it truly was a remarkable performance by San Francisco. And let me introduce the man who has been leading that effort. And you know, I'm not one that typically stands up and tells what great jobs mayors are doing, but I tell them what they should be doing. But Mayor Lee is showing us what should be done and deserves a lot of the credit for this growth in technology and all the creative services jobs and improving the quality of life in the community. Mayor Lee. Welcome.
Ross, thank you for that wonderful presentation. And Jim, it's always a pleasure to work with you in the Bay Area Council, the Milken Institute. Thank you for showing that San Francisco continues to be the best city to live, to work, and to play. And I am very, very honored to be its mayor. I get to work with quite a few great talent in our city, and some of them are in the audience that help me continue making the city a success. I want to say, too, that this has not been the case, and I've been around long enough to know that. You know, my favorite line in this discussion, Ross, is that our job growth is really an unrivaled accomplishment, quote unquote. And, you know, we forget sometimes, just not very long ago, how hard it was to imagine this and how unprecedented this recovery is, given that when you look at the other cities that we're compared to, you know that we're very limited geographically. So we have to be pretty inventive as to how we do this. And we have worked hard. There's some basic things that I'll share with you as part of the panel today as to how we may have gotten there, but we weren't seeking to be the best city. I think we're just seeking to make sure we got out of this recession well, and that we're always going to be talking with our business partners. Because one of my main questions with the business community is help me look around the corner. Help us as a city, as a region, prevent ourselves from being thrust into another recession. What are the jobs and the industries that sustain itself throughout any economic challenge that the nation might confront us, or now these days, the world economy could impact us? So we worked hard to earn this title, and I think that now that we've created more jobs than any time in our city's history, we're not going to sit on this. We're going to really try to move forward. And those of us that have lived in San Francisco and seen our city and our region's growth know this firsthand. We know that the businesses in our downtown and our SoMa are growing. We've seen those companies from the valley slowly move to and expand in San Francisco. And we have seen this as a positive thing. There's amazing success stories of not only those that have grown here, but now those that have started here have become titans in the business community. Salesforce, Twitter, Yelp, and so many others. This amazing story also says to us that we're excited, and I'm excited because it isn't just one sector. And this is the thing that I will repeat over and over again. Industries like healthcare, like biotech, tourism, construction, manufacturing, and more. But we also see technology very strongly woven into all of these different industries. And this is the excitement that I continue to share with our Chamber of Commerce, with our SF City technology companies, with all of the different sectors, is that it isn't just one, it's all of them. And that gives us a tremendous opportunity because all of these sectors have helped people get back to work, have created the revenues that we can invest right back into our neighborhoods, into our small businesses, into infrastructure, into the people to help create this city to become a continuing attractive city. Because without that investment, you're going to quickly see that the very talent that the companies have recruited here, and one of the greatest assets that we have is our talent. But that talent won't be here unless we continue thrusting forth a diverse city, a city that's exciting to them, that keeps their minds focused on being successful and being integrated and being a world-class city. So when I say that we're not sitting on our success, I also say we're building upon our success. We've raised the minimum wage here. That's an excitingly good thing for people who really feel that they can't afford to be here. We're investing in transportation. We're implementing a very serious tax reform. How could you have a tax system that was literally taxing jobs when you're saying, I want those jobs in our city for everybody? We're investing in our city's youth and families and education system to an unprecedented level. And I was with the school district the other night as they swore in the school board members that were just elected. And I spent the entire evening with the school district I wanted to demonstrate how important education is to the entire city. We're building housing, and you're going to hear me this year and any other year, whether I'm elected or not. It's going to be housing, housing, housing for middle income, for workforce housing, for our low-income dwellers. We're going to make sure that the residents benefit from a successful city. San Francisco is proving, and it will continue to prove, that you can have a strong economic growth city and still be a socially progressive leader for the nation. This is important, I think, to the conversation to the rest of the country. And I'm going to be talking about that over and over again because we can take care of a lot of people who have struggled when the economy was bad. When it's good, this is where investments should be. The two simply aren't mutually exclusive. And we can and will continue to support not just economic development, but our people, our families, our youth, our homeless, our kids who didn't get the attention, and now they got our full attention. We want them to succeed, and all of our residents succeed. So with this story, I want to just add value to that. We're not sitting on success. Just because you're number one, we need to be number one in many other categories, and particularly when it comes to our family and youth, and that's what we're going to continue to do. So with that, I'd be glad to participate in the panel discussion. Thank you very much.